We are winding down 2024, and it is a great time to recap this past year in markets and look ahead to 2025. Very pleased to have with us from Advanced Trading Economist Brian Basting. Brian, thanks for the opportunity to sit down and chat.
Thanks for the opportunity to be with you, Don.
Let's step back and look at this year 2024 from your perspective. What were the big stories in the marketplace? What impacted our growers?
I think at the top of the list, Don, we have to talk about the surprisingly high yields we saw, particularly for corn here in many places across the U.S. Really, the corn market started out 2024 with the highest prices of the calendar year made in January. That's extremely rare. I can only think of one other time that may have happened in my career, stretching back nearly 40 years. So this is a year where we had big crops in South America. We had record yield here in the U.S., and we had competition in the export market that just never gave us a really good summer weather rally. We had a modest spring rally in the planting season there back into mid-May, but that was about it. And so what we've seen is a market that all the way from January into harvest, let's say early September, ground sideways to lower. So the surprise there, I think, was that these yields, and you got to really tip your cap to the producer, Don, embracing the latest technology, embracing the latest farming practices, really brought this crop home with over 180 bushel national average yield, a stellar yield. But that did pressure prices down below $4. And now we've seen a rebound, though, the last 2 or 3 months. And in fact, here as we close 2024, Don, we're looking at the highest prices for March corn futures here since June 25th. So we're really looking at a nice rally going into 2025.
It's interesting. We had such a very wet spring, at least in our footprint, but then a long, extended fall. Guys really never had a chance to get off the combine. They were going nonstop from one crop right into the next, and a beautiful harvest season, and really had the bushels we were looking for, too.
Yeah, you hit the nail on the head, Don. We saw the same thing around here, and not only provided that opportunity, as you said, to get the harvest, everything done in terms of a prompt harvest for 2024, but also get your field work done for 2020, 2025. So every year is different. We never know what each year is going to bring. With this year that brought us ideal summer weather conditions, as it turns out. It never got really hot this summer in most places. Obviously, there were a few spells here and there, but it never had that extended heat wave as such that just crushed the crop. And then we had an ideal fall, as you said, and not only get the harvest completed, but get some fall field work done. And in fact, all fall field work is completed around here.
As you look into the South American crop going into 2025, maybe a couple of weeks here in this forecast looks a little bit dry, but boy, they've had a good go as far as getting this crop in and getting things established as well.
It's a bit of a double-edged sword because, as you said, we're looking at the more competition, underline the word potentially here in 2025-26. And by that, I mean USDA's penciled in a rebound, or an increase, I should say, in the crop in Brazil. Maybe not quite as large as what it was 2 years ago, but a larger corn crop. Now, that corn crop, the vast majority of it, Don, won't be planted until it's double cropped after the soybean harvest here in January and February. However, in Argentina, they've already planted their first early season corn, let's call it, back in October, and then they wait. They don't plant their later corn until December, and it's about, I would say, 35% early, 2/3 late. We're right in the middle of pollination now for that early corn, and that's what's caught the market's attention. And the reason that that's so important, Don, is that Argentina is a big corn exporter. From March through June, in a typical year, Argentina will supply around 25% of the world's corn needs. So really underscore that the market is counting on, if you will, a big crop from Argentina. Now, I don't want to say that crop is burned up as we speak here. It can still be a very good crop. And obviously Brazil, not even planted the vast majority of their crop. It can still be a very good crop. So I echo your comments. The potential is there for a large South American crop. The market's concerned, however, at the moment that it's turning hot and dry at the wrong time period for the early Argentine corn. And so it's something we want to keep an eye on very closely here in January and especially February for Argentina. And then we'll stretch the weather season all the way into March and April for that, for that Brazilian crop. So I think we're looking at at an interesting market here, Don, because we are the only shop in town in the world. I'll put it this way. We're the primary shop in town in the world at this day, at this moment, for corn. If you want corn, you're coming to the U.S., and many believe the USDA could nudge up that export figure a bit down the road. They nudged it up, I believe it was 150 million bushel here in December. So I think that's something to keep an eye on moving forward, and that's what's supporting a little bit tighter balance sheet for corn too.
You talk about the competition in the demand side of the equation. China, of course, has always been that 800-pound gorilla in the marketplace. Certainly it's a different environment, particularly now as we look into a new administration, a lot of talk of tariffs. Have you seen maybe some buying ahead of that tariff situation and change in the White House? What's your take on what's happening with China?
China is not a buyer of corn at the moment, Don. They have really scaled back their corn imports from recent years. Combination of factors. They had some really strong domestic crops of corn in China last couple of years, and their profitability for feeding corn, for example, to the hog market is not good right now. So they're backing off in terms of their corn imports. So we've sold virtually no corn to China this year. When I say we, the U.S. In fact, China has imported very little corn from all sources this year. Beans, back to your point, yes, I think we are seeing some sales of beans to China prior to the new administration, as you said, coming in here in January. There was, if you will, quite a bit of butting heads there 4, 5, 6 years ago when China and the U.S. Had to tariff back and forth. And so, yes, I think China is spreading their eggs out from that basket, if you will, looking ahead. What China is looking forward to, though, at this point, Don, is that Brazil really looks like they're positioned to have a record soybean harvest, starting here in January and extending into March and April. The numbers I've heard floating around, Don, are over 170, maybe 175 million tons. In comparison, last year was about 152, 153 million tons. So potentially over a 10% increase in Brazil. Long story short, China is buying itself some time to wait for that record Brazilian crop. Now that Brazilian crop isn't in the bin. We could still have some issues late, but for the moment it looks like it has great potential. But I think we're seeing a little bit of buying from China on the U.S. front on the soybean issue, on the soybean front.
These geopolitical issues certainly impact us. We look at what's happening with Russia and Ukraine, and there's other parts of the world that certainly we have to pay attention to as well. What influence do you see, particularly in that Russian, Eastern European type of situation?
Boy, I think it's never been more uncertain than it is today as we enter 2025, Don. Just so many moving pieces worldwide. I think that from a producer standpoint, the bottom line to me is you want to defend your balance sheet. And you want to defend your balance sheet in this case against a potential black swan. Something happening that could really crush these markets and really, if you will, knock you out as a producer. And that's why we say defend your balance sheet, get a floor underneath these markets. Leave the upside open, however. You know, if things were to stabilize as such and maybe continue to see some strength via a weather scare or maybe some unexpected demand, surprises can work both ways. They can be negative and they can be positive. So I think, but the key there, Don, is to get control. From our standpoint, we understand there's quite a bit of 2024 bushels unpriced yet. From higher than expected yields, for example, in the corn example. But regardless, unattractive price, producers are holding quite a bit of 2024 inventory, corn, beans, spring wheat, whatever the case may be. That insurance price, I'll just focus on the grains, was set back in October. There is no backstop from the government anymore. So we encourage producers to get control, get a floor underneath the market. In my opinion, a good option to consider would be to purchase a put option. Gives you that flexibility to participate if the market goes higher, but also gives you that floor in case we were to get a black swan event. But back to your original question, defend your balance sheet. There's too many unknowns out there that can really hurt you if you're not prepared.
What about the outside markets? When you look back to 2024, what was the influence that we saw in the financials?
Well, we've obviously seen a stellar year for the equity markets, Don. A lot of that money, if you will, investment money, moved into the equities in 2024 and 2023 I'm trying to get my years straight here, but there was a year or two ago where it wasn't so good to be in equities, but certainly 2024 was. The point being is that investment money going to stay in equities, or is it going to move around to something else? Now, the money's always looking for the best home to get the highest return. Highest return in 2024, without question, was the equities, as opposed to commodities, for example. Will 2025 be a year for commodities? We don't know. But that's when you talk about the outside markets, that money is always looking for the most attractive home to go to in terms of return. And perhaps that might be something to keep an eye on if that money switches, rebalancing, however you want to phrase it, away from equities into commodities. I don't have a strong bias on that at the moment. I do say it's something to be aware of. And again, that's where you want to give yourself flexibility in the markets. You avoid painting yourself into a corner with a marketing strategy, and you give yourself that flexibility to have a floor underneath the market, but also be a market participant if a rally were to develop here via a number of different sources. But one caution note on that, Don, we are seeing a very, very strong dollar. Historically, a strong dollar is not correlated with exports, or at least it's a factor that dampens exports. But in our experience, Don, the most important factor influencing, for example, corn exports is the available competition. The strength of the dollar is a very important secondary effect, but right now we are the only shop in town. So finish up your question back to the beginning. I would say at the outside markets right now, there isn't anything to me that says all that money is going to pour into commodities away from equities, but it's something to be aware of as you move forward because equities have certainly had a great run in 2024.
I always try to look back at just net farm income. We know what the soft commodity market has meant. Input prices have been rather sticky. It's those farmland prices that have held relatively firm. There's been maybe a little bit of pullback depending on the quality of that land in our region, but going into a new year, those land prices still remain relatively stable, relatively strong.
They do. The land prices, I think, in any year, there's a number of different factors, Don, but an old friend of mine used to always say, always look at interest rates and always look at commodity prices when you're talking about land prices. And interest rates are nudging back down, slower than many would like, but they are nudging back down. The Fed has given signals that perhaps they might not reduce the interest rates as much as what the market had hoped, let's say a month or two ago. But it still feels like that the interest rates are coming back down, so that may be a supportive factor. I'll underscore that obviously the interest rates are still much higher than what they were 2-3 years ago when they were at rock bottom levels. But the other thing is commodity prices in terms of land prices. Nothing to write home about there at the moment. And there's some signs maybe that we're bouncing up here, but those signs are not definitive at the moment by any means. So it has been a bit surprising to see land prices be as stout as they have been, given that we've seen these weaker commodity prices. Net cash income to the producer, obviously, as you said, well down below where it was 2-3 years ago.
One of the rock stars in this market has been this cattle market. We've been holding strong for 3 straight years. It's hard to see a lot of rebuilding going on in that cattle herd. What does that mean as we go into a new year?
It's good news. We were looking at some continued indications of good beef demand. Choice beef really is held in here well throughout the holidays. Looking at some high prices here, nice rebound this past week. As a matter of fact, I tracked that market. So really looking at some supportive factors, Don. I don't want to rain on the parade, as it were, but I just think anytime you get at the prices at these high levels, you have to be cautious. I go way back, and this is in some ways, particularly for younger viewers, ancient history, but back to 2003, for example, when the mad cow disease occurred and we really crushed the export market for beef. That was a black swan event for the cattle market. No one in the world knows that a black swan event is on the horizon. Hopefully they don't see that ever again. But the point being is that at these high levels, again, the same concepts that we talked about a moment ago with regards to the grain markets. Defend your balance sheet. Look at your alternative marketing strategies to put a floor underneath the market, but But boy, you want to leave this upside if it wants to run. This cattle market, feeder cattle have had another surge here just recently. If it wants to run, the cash cattle market is approaching low 190s. I think 193, 190, 192 in that area again. If it wants to run, make a run, let it run. The fundamentals are constructive at the moment. Cattle on feed showed numbers from a year ago about unchanged. I'd say the demand is steady. Export demand has showed some cracks here lately, but again, you're looking at some high prices to an end user on that side, but it's still there. I don't want it to discount it, but again, any market where you get high prices eventually cure high prices, whether you're a corn producer or whether you're a cattle producer. But for the moment, I certainly want to ride that wave, but to defend my balance sheet at the same time.
It's interesting you mentioned the BSE story. We were talking in the office this morning about the cow that stole Christmas back so many years ago. We're dealing with this H5N1. Certainly it's been devastating to the poultry industry. It's impacted dairy producers. But it really is an example of maybe a black swan event, something like that on the animal health front that really could impact this market. We always have to defend ourselves and protect ourselves.
Boy, you couldn't have said it any better, Don. I remember walking in my Christmas party on like 2 days before Christmas in 2003 and saw an old friend of mine, family, and he said, "Brian, what's going to happen to the cattle market?" And I said, "Well, I left the office early," and he said, "Well, they found mad cow." And I told that story for years afterwards. I said, we found, on January 1st, 2004, there were 100 million cattle in the U.S., roughly. 100 million. And they found one. I think it was out in Washington State, as I recall.
Yeah.
And it crushed the export market for a decade. We lost our export market. So you never know what can happen. As you said, the bird flu is front and center right now. Boy, the egg prices have really gone up sharply here recently. You just don't know. And so, you don't want to, the sky is falling. I'm going to, look out. But you want to always defend your balance sheet. If this market wants to run higher, wants to run over $200 cash cattle, let it run and take advantage of it. But let's realize that there's always something out there that we don't see coming, the left hook, if you will, the black swan, that can really, really hurt our balance sheet if we're not careful.
Well, Brian, as we put a wrap on 2024, any other final thoughts for our producers they should think about as we go into a new year?
First of all, thanks for having me, Don. I enjoy being with you, enjoy talking markets. I think that I always like to take a look at what can happen in 2025. There's always going to be surprises. If we were to turn back the clock 365 days and you and I had this conversation and the waning days of 2023, who could have predicted what happened in 2024? Just so many twists and turns and some good, some not so good for producers. But I'm always optimistic for producers. I think we have our best producers are right here in the United States and the world. We're blessed with some of the best land in the world. We have marketing tools that we can work with. Let's use those tools to our best advantage. Let's defend our balance sheets. Let's avoid painting ourselves into a corner. And let's let these markets that are bull markets right now run. But let's also put a floor underneath them too. And then let's also be aware that, high prices do cure high prices if you're talking about cattle. And by the other side of the token, low prices do cure low prices. And I think that that's going to be something that we keep an eye on too moving forward. And that underscores, again, avoiding a win-lose marketing strategy. I'm just going to sell something here or use with no upside. I think, for example, you could attach some call options to a sale that you're making for 2025. But I'm excited about 2025, Don. I think our economics aren't what they were a couple years ago, but our farmers are certainly stronger for living through that and managing through that. And I think that as we look forward here, we got a lot to be excited about with 2025. We don't know what's going to happen here, but again, I think with the farming practices we're embracing here in the U.S., the results speak for themselves. I just think we always want to embrace the fact that we have opportunities that many, many other places around the world don't have in terms of land, capabilities, the equipment, the technology that we're seeing here in 2025. And also, most importantly, from a marketing standpoint, is the tools that are available to us to manage these prices. And that's the key thing, is to embrace that management, get control of these bushels, or get control of your livestock, as it were, but also give yourself flexibility. But I'm excited about 2025, Don, and certainly wish all you and all your viewers best wishes for the new year.
You too as well, Brian. We appreciate your insight. Thanks so much. Brian Basting with us, economist with Advanced Trading. Again, that is a wrap on 2024. We look forward